Thank you all for joining us today. I'm honored and excited to welcome Jackie Logan from Raise Green / Honeycomb Credit, and she'll tell you more about that. Jackie, background is hardcore finance and led her to crowdfunding with purpose. So I don't want to tell too much about Jackie's illustrious career. I prefer that she does it herself. So Jackie, for those that are not familiar with you, with crowdfunding, with Honeycomb Credit, with Raise Green, and your background, tell us a bit about you, your work, your journey, the work that you're doing now, your big purpose, and ultimately how we can help you. And I'll go on mute.
Wonderful, and thank you for having me. It's a pleasure. Uh, so, yeah, my journey, starts as a uh, you know, New York City public school kid, immigrant family, and having the amazing opportunity to both be a city kid as well as a country kid. My mom's family were dairy farmers, so I really split my time between being in one of the most amazing cities in the world with such a diverse group of people and ways of living to incredibly rural and lifting bales of hay, taking care of cows, milking cows, etc. An amazing background, and really those two things have been instrumental in how I see the world. Number one, I very much appreciate the United States of America. It welcomed both sides of my family. Coming from my father escaping the Holocaust during World War II, and my mom's family also escaping, certain kinds of persecution coming to the United States as well. And so just fundamentally feeling grateful and feeling a need to give back and contribute, being a good citizen, and not, thinking that I deserve more than my own little space, and that I need to earn things. And then on the other side, also just the beauty of the earth and understanding that we need to care for it. And if we care for it, great things come. So that is just kind of fundamental to who I am at my root, and what has driven me in many ways. I ultimately found, once I graduated from college, I have an undergraduate degree in chemistry from Williams College in Massachusetts. I tried marketing for a little bit, went back to Wharton for business school to really kind of get some more education and then figure out, where do I go from here? It wasn't marketing, and got bitten by the trading floor bug. Did a summer internship at JP Morgan on the fixed income trading floor and realized that I just love the capital markets. And it is, it moves fast. It's math, it's economics, it's relationships, it's juggling like a zillion balls in the air at the same time. And so yeah, it just and really, really being able to see capital move very quickly to impact companies to get things done. And just fell in love with it, and that really has been the root from the 80s on as to where I wanted to really point my career. So I spent 12 years on the trading floor at JP Morgan in the fixed income space, covering very large institutional clients. Like I covered Vanguard for 8 years, and large banks and large, insurance companies. And it was an amazing journey. After 12 years of doing that, decided to actually join a startup that was trying, it was a bunch of folks that I knew, some from college, some through friends, that were trying to build trading platforms. This is the early 2000,
mm,
around 2000, trying to build trading platforms for illiquid assets. And I had experienced firsthand on the trading floors that we would sell something that was a little more private oriented or quirky to a client. And then at some point they'd want to sell it. And
mm,
it was basically impossible to sell. The traders would not take it down themselves. They would say, I'll work it for you. And we'd work it for a while. And inevitably, it was very difficult to move. And that the excitement of trying to figure out, well, how can we bring folks together? And if the trading floor won't do it directly, can we find another way to do it? And so worked on that for a while. Then 2001 hit. And not only did we have September 11th, which was a crisis here in New York and pivotal for us, but also the dot-com bubble and
mm,
difficulty raising capital, stepped out of the traditional finance workforce for a period of time while all these things settled, actually worked for a nonprofit developing education programs for underserved youth. Again, you know, trying to think about, well, is this really the path I want to go on? Because I loved, working with these young kids, and you could see the direct impact, social impact, and economic impact on these kids. But then decided that I really needed to get back to the capital markets. I did so in 2010, joined Goldman Sachs, and I wanted to be on the trading floor, but I didn't want to sell, I didn't want to trade. And at that time, compliance was really, really growing because we had
mm,
come out of the 2008 seven Great Recession, and financial crisis, and all kinds of regulations were being created, and you really needed folks on the trading floor to enable the business people to actually execute in a compliant manner. And I figured, well, I knew the trading business and I knew capital markets, and I would just learn compliance. And so gratefully, Goldman Sachs took a chance on me. I
mm,
started in the institutional side, overseeing research, equity research sales, which I really didn't know much about because I had
mm,
been a fixed income gal, but you know, put in the elbow grease to learn and figure things out. And uh, within my first year of working on the institutional side, was offered an opportunity in private wealth. And I thought, oh, private wealth, it's not going to be as interesting. On the institutional side, we're moving big amounts of money and it's exciting and it pushes the edge.
mm,
But I thought, okay, I'll pop over to private wealth. Let's see. And it ended up being an amazing experience and very, a key, a key aspect as to how I decided the next leg of my journey, which brought me to crowdfunding. Um, and in the private wealth area, I had first of all, what was wonderful about it was it was personal. These were individuals. It was their money. It was their families. It was, generational wealth. It was figuring out, uh, you know, uh, as well, impact, and it was just personal, which I found really, really engaging. And as well, I got an opportunity to look at and work with every single kind of product. I was, overseeing trading in private wealth from a compliance perspective, whether it was options, equities, fixed income, FX, et cetera, et cetera. So really had a full swath of the product mix, which was fabulous. But most importantly, I had the opportunity to oversee some asset management desks, which I had never really engaged in from the buy side. So I had always been on the sell side,
mm,
overseeing sales and trading, but now I actually was working directly with the desks that were managing client money. And not only from a regulatory perspective, had the ability to understand the regulations there and work across Goldman Sachs from both the trading floors, which was broker-dealer, as well as Goldman Sachs Asset Management, which was asset management. So that was wonderful. But also got the opportunity to sit with my wonderful desks and when they were developing new strategies. And that's where I first got involved in ESG strategies.
Mm,
And, it was 2015, 16, had I could see at that point the incredible interest coming from private wealth, directly people wanting to put their money into something that had impact of some sort or didn't impact something of some sort. And then at the same time, I saw, gee, in the public markets, it was so difficult to really, really fine tune impact
mm,
because the data wasn't there.
mm,
And at the same time, of course, working with my desk, putting together, make sure that we were disclosing what we could or couldn't offer, clients, that was critical, right? Disclosure to make sure we were clear about what we could accomplish or couldn't. And, but I also felt at the same time, damn, we got a climate crisis here. And isn't there some way to get private capital moving directly into climate in a
mm,
much more rapid manner? And
mm,
so with that and being, you know, at my kids are out of college, I'm really at a point in my career that I wanted to get up every day and be like incredibly excited about
mm,
what I was working on, if I could do that. And so I went on the journey to figure out, well, where does that happen? And I looked at things like, working at, MSCI and the ratings and the climate disclosure project, the UN. And then I had a pivotal meeting with one of the gals who was involved with running New York City Climate Week.
mm,
And she said to me, she said, look, Jackie, with your background, 25 years in capital markets and understanding institutions, retail, individual investors, and understanding, capital formation, she said, you need to really, really figure out how to get private capital moving directly into climate. And so at that same time, I went to a blockchain Yale event, sat down at an open seat, started chatting with the fellow next to me, met another fellow across the room, and both those two fellows ended up being my co-founders at Raise Green.
mm,
They each were coming at this from a different angle. One of my co-founders coming at it because he is a climate data scientist
mhm,
and was measuring how fast the permafrost was melting in Siberia. Basically said, it's melting, we got to move. Went back to Yale to get his master's in sustainability. My other co-founder had worked for Obama for 8 years.
mhm,
And he helped negotiate the Paris Agreement with Kerry. He was deep in on policy and realized that we just need to get more money going into climate and more people involved. And he went back to Yale, so my two co-founders met at Yale, and then shortly thereafter, they started Raise Green with the idea that we needed to get more people involved in climate and get more money going into climate, and decided that with the brand new regulation in 2016, regulation crowdfunding,
mm,
this was an amazing opportunity to do just that, because this regulation finally, for the first time, one, opened up in the ability for anybody who's 18 years and older across the United States to actually invest in private securities. Whether you have accredited, not accredited, uh, everybody can come in and invest. And it's very easy to access investment because it's fully online. It is a low lift to open up an account and place a first investment. And then on the other side, the many, many barriers, the complications to, legal fees, et cetera, to actually create an offering, is the wonderful thing about Reg CF is it created a funding portal, which is what Raise Green became, and that we are an expert in regulation CF, and we can work with folks across the United States who are trying to create a solar project. They've got a climate tech company and they're trying to raise capital. They can come to us, and in an incredibly fast amount of time, we can help them get their paperwork in order and get them up on our fully online platform and open it up to their community and our community to invest. And puts them, it's incredibly flexible in what they want to present to the crowd as a security investment. And it puts the control back in their hands, as opposed to being told, this is the term sheet, this is the way it's going to go. They get an opportunity to try to structure something that really works for their project or their company. And I can give you some examples of exactly that. And so they had started the application to get their crowdfunding license, but neither of them had any expertise in the capital markets.
Mm,
They didn't know about securities. They
mm,
didn't know institutional investors or retail investors. And then here comes along Jackie Logan. And I'm literally at that moment where I am saying to myself, all right, let's take this 25 years of experience and get capital moving directly into climate. And we were I was a perfect match for my two co-founders. And they invited me to join as a co-founder, and I did, and that was in 2019, and honestly never looked back. It has been an amazing journey. Uh, uh, you know, uh, uh, Developing Raise Green, and what we'll talk about shortly, in December, Raise Green was actually acquired by a larger organization, specifically, strategically, in order to grow our mission. But at its very highest level, Raise Green was created in order to get more folks involved, more money going to climate. Our initial idea was that there should be a solar array on, and this is pre-IRA,
okay.
pre-CHIPS Act, all this kinds of stuff. And we still felt there should be a solar array on every single commercial and industrial sized building across the United States. And why not? And we knew that there were some challenges. One is there was just and then the other piece of it was, and the community should have an opportunity to own it. Uh, and so not some big bank outside of the local area. Let the community own it and gain the benefits, full
Mhm.
benefits of renewable energy. And so what we knew was that there was lack of knowledge in communities. There were a lot of soft costs, legal expenses and things like
Sure.
that. And
Mm,
it was difficult to access capital. And so our initial focus was to create a kind of solar project in a box.
oh,
Uh, we did that, a software journey, if you will. You could call it a TurboTax kind of thing, which basically took a non-expert solar developer from start to finish to actually create the framework of their project, including sample documentation that was dedicated for the local space, et cetera, et cetera. And then at the end of that initial part of the journey, drop them on Raise Green with all their paperwork and everything done and open it up. Then they could just invite the community into to Raise Green to invest in it. So that was our initial focus. As you can imagine, just getting any local, green hero in a local community to step up and be a solar developer, even with software and our sport, not that easy. We know that projects, regardless of even having, the most experienced folks and support around it they take time. They're sometimes, and at the same time, we had so many folks coming to us and saying, "Hey, Raise Green, I got energy efficiency projects.
Mm.
Could I raise capital for them? Hey, Raise Green, I'm working on a new climate technology. Would you support that? And hey, Raise Green, I've got a solar project. I want to refinance it, right? And we had a crowdfunding portal. We knew we needed to grow that and grow the investor base. And we thought to ourselves, look, we're going to continue along the journey of trying to, work on this software and, with the idea to actually be at the root of project formation. But at the same time, we want to get some flow on the crowdfunding platform,
Mm.
and build that out. And so with that, we kind of branched into, we had two work streams going at the same time. And then scroll forward, we decided that, uh, there were other folks coming into the space, developing certain kinds of software projects, software for solar. And we just decided to shift more and just focus on the crowdfunding portal. And so after 44 securities offerings, raising over 10 million on the platform, working with just amazing people, doing all kinds of things out there from, a solar project, first of
Mm.
its kind on a building in Baltimore, all the way providing 100% LMI solar to 150-ish families at 25% below the cost of electricity, that where Raise Green came in as the last gap, the crowd came in as the last gap capital to get that $2.5 million project done, or, financed, all the way to, a new climate tech, that, got some of its initial funding. And and including folks like Block Power, we did their first, an amazing organization, electrifying urban communities, started here in New York, did their first 3 raises, to Connecticut Green Bank,
Mm.
who really, really, they had actually been in their quasi-governmental agency. They've been in the muni market, raising there. But the Brian Garcia, who's the CEO, always had the vision that they really wanted to make investing in Connecticut's green economy and the work that they were doing open to everyday folks. But
Mm.
if you issue a muni bond, you have to have a broker dealer in order to
Right.
buy it. It's a minimum of $1,000, all these kinds of things. But they really wanted to open it up to everybody to be able to come in and support. And so working with Raise Green after it took us about a year and a half to 2 years to actually figure out the structure, et cetera, et cetera. They launched their first offering and just completed their 13th offering, actually,
Mm.
and got into doing quarterly offerings, 1-year notes, and allowing people to reinvest, and really, really opening up for as little as $100, folks
Wow.
across Connecticut. And by the way, about 50% of the folks that come and invest in the Connecticut Green Bank Green Liberty Note are from outside of Connecticut,
Oh.
uh, because they just want to put their money into local impact. It doesn't have to be in their local community. It can actually, when they see that, boots on the ground, money is going directly into climate, folks from all across the United States are excited to invest. So anyhow, in December, we made the strategic decision to be acquired by a larger crowdfunding platform that is values aligned. And it was very, very specific. because we decided that in order to really, really grow this mission, maintaining all the infrastructure associated with running a crowdfunding portal. Look, we're regulated by the SEC, right?
Mm,
We have a lot of compliance to do. Um, there's a lot of legal work we do. You have to have the whole infrastructure of a business. Whereas what we really, our expertise and what we really wanted to spend time focused on is talking to climate entrepreneurs, doing something, as I said, whether it's a project or whether it's a working capital for a business, and talking to impact investors, figuring out what are they looking for and what are new avenues for them to come and invest in on the platform. And I can give you some examples of avenues that we uncovered and are trying to open up for folks. So, and a lot of the back stuff, right, it's generic.
mm,
And, economies of scale, et cetera, but we wouldn't want to do it if it impacted the mission. Because that's really the board and of course the, myself and all uh really wanted to continue the mission. It was really important. And we had the incredible opportunity of being acquired by Honeycomb Credit.
mm,
Honeycomb Credit had been a friend of Ray's Green for years. We had done co-promotions with them, they being focused first on local small businesses and supporting the health and well-being of local communities by working with small businesses and getting them up on their funding portal, also under Regulation CF, and opening it up to their community to invest. And Race Green we'd done cross promotions. They had advertised to their community on Earth Day, and then we would advertise to our community on Small Business Saturday. So we had been friends for a long time, collaborating, knowing that they were it was an amazing organization, highly professional, highly organized, execution oriented, and just really, really dedicated to their mission. And what was amazing to find out was, from Ray's Green's perspective, when we polled our investor base, they said to us, hey, climate first, local second.
mm,
Loved anything that had a local feel. The Honeycomb side, their investor base, much larger than Ray's Green, said local first, sustainability and climate oriented second. So Honeycomb Credit had noticed that all their sustainability type, the LA
mm,
Compostable, which is a small business out of LA, doing local composting, various kinds of businesses that they had that raised capital did really well. Folks were really excited, and they wanted to grow this space, but really didn't have the expertise in climate and sustainability. And once we got to talking, realized that this was going to be an amazing strategic combination for both organizations. And just a few words about why, you know, the roots of Honeycomb and why they are so mission oriented, which again, Ray's Green, touches why we were great to come together. Is, Honeycomb Credit was the CEO of Honeycomb Credit was in business school, and he had seen, and when he got out of business school, he was working in finance. But he comes from he is a sixth generation community banker from a
mm,
small town in Appalachia. And so family in this for 135 years. And he saw the disappearance of the community bank and the relationship banker, where the family that had owned the local bodega in the town. Everybody, they all went to school together. They played baseball together. They've been important in the community, and they needed a loan. They would go to their relationship, they would go to their community bank to get a loan. But as the community banks disappeared, where did they go?
Right.
And in addition, SBA loans, the number of loans that are being given now have really, really shrunk like in half
Mm,
since the financial crisis. So the opportunity for local small businesses to actually access capital had been disappearing. And scroll forward, here comes regulation crowdfunding, right?
mm,
Um, in addition, the other co-founder, he uh, had actually an MBA and all this finance background and all this kinds of stuff. And he had decided that he wanted to open a juice shop, and he wasn't able to get a loan
yeah.
to do that with all his contacts and experience and all these kinds of things. And so George and our CEO and this other co-founder came together and said, let's use Reg CF. Let's let a new community banker, if you will, start to fund organization. Let the community de-risk, because they know these businesses are good. They want to support these businesses, and let them come in and give them the opportunity to invest. And let's create a crowdfunding portal that's going to basically offer this avenue of capital and economic development. And so they started in 2017. And actually, this week is Honeycomb's 7th birthday. We're having a big bash with
Oh,
some
cool.
discounts on the platform, and hope everybody will come and visit. And so now together, so Honeycomb has and Raise Green now. We have a funding portal that has about 25,000 impact investors as part of our investment community. And we have done together over 575 offerings on the
Wow.
platform, and moved about 50 million across the platform since we were both created. And so now what's wonderful for me when I start to talk to someone who is developing a project, I now can say to them, you come to me, all you need to worry about is building your community list of folks that you're going to reach out to bring to the platform. I have an expert team who is going to take you through the process very swiftly, using technology as well as having a one-on-one coach, get you up on our fully online platform, and we can do it basically as fast as the person that the business owner or the project owner can move. We've done it as fast as 48 hours to get
Wow.
some the process and up on our platform, um, and open it up to the public. And then after the raise, we can take care of everything. Raise Green didn't have all those services. I now can say to somebody, you don't have to be in the business of, let's say it's a debt offering, repaying your customers,
Right.
your investors, one for one, and handling tax forms. We do all that for you. And so literally, all they need to do, if you are excited about bringing in a community, both accredited and non-accredited, to come in and support whatever you're working on. And by the way, this doesn't have to be your main source of capital. It can be just one slice of capital, with the purpose of, one, raising capital, but also engaging a community. And and many folks do it really just for that. And I'm going to use Connecticut Green Bank as an example. I mean, they really want to bring in the community and be able to have a direct relationship with everybody who wants to come in and support what they're doing. So it is, I am just so excited because now I can speak to anybody, whether it's a new climate tech company or whether it's a project, people who are, you know, really, really don't have the bandwidth, if you will, to handle all the operational work associated with crowdfunding. Um, all you need to do is build your list of folks you're going to bring in. We will expose you, of course, to our 25,000 folks when your raise goes up. But that's really all you have to think about. And the lovely thing also about Reg CF is you can talk to anybody about your offering. You can advertise it anywhere. You can put it in your shop window. You can shout it out at the top of a mountain. You
Mm.
can talk to the guy or the gal who's sitting next to you on the bus and say, "Hey, look, I'm raising capital for my company. This is what it does. You can find out more. We're so excited. We just got a contract here. We're this, that, and the other thing. Um, Here's a link. Jump on our, crowdfunding platform and you can invest today." And many other forms of raising capital that, you can't do that. You have to
Mm.
be careful who you reach out to. And the wonderful thing about Reg CF, low lift to get you up, easy to get you exposed to your community. And then afterwards, you have support in order to take from a business owner's perspective or a project, we'll take care of everything for you. And on the investor side, what's super exciting is you get a host of direct opportunities to look at and say, does this story speak to me? Do I want to see this project done? And, you can see where the use of proceeds are going to go. And you can make a decision as to whether this is something you'd like to place an investment in for as little as $100. You can make those choices today. And so at the end of the day, giving more folks the opportunity to get involved, whether through investment or through their company itself or their project and getting it up and done, all the way to just getting more capital available to folks that are trying to improve the health and well-being of local communities.
Fantastic. The um, so you're now part of Honeycomb Credit
That's
with it's IF Women, I Fund
Oh,
Women.
yes, 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 yes. Thank you for. So the other exciting thing in April, um, one of the things that Honeycomb has come across is business owners will come or folks early on in creating, ideating, if you will, what they want to grow, right? Their business, their project, et cetera. And not everybody is at the point where they really are ready for Reg CF capital raising. Um, you have to be somewhat formed. You have to have financials in order. That doesn't mean you have to be revenue producing, but you really have to have a pretty clear business plan. And your team should be in good order, and et cetera, et cetera. But not everybody is at that point. And, Honeycomb over the years, and Race Green had this as well. Folks would come to us and they weren't really quite ready to issue debt or equity in their company to the crowd. And, but so we just could turn them away. But now in April, Honeycomb acquired IFW, which the original name was I Fund Women. It is now IFW. And what IFW, now part of the Honeycomb umbrella, offers is, number one, they have a rewards-based crowdfunding platform. So if you're not ready for Reg CF and securities issuance and things like that, we have another location for you to do a rewards-based crowdfunding. Rewards-based, you can think of Indiegogo, Kickstarter, something in that vein. It's not like GoFundMe, which is just plain old donation based. It's more in the rewards based arena. We also have all kinds of support for businesses, various kinds of classes in related to your website and your balance sheet and things like that to offer education classes and things like that. In addition, we work with various programs out there to support grant programs. And those grant programs can be for some of them are for early stage, some of them are for a little later stage and can be offered to folks that are doing crowdfunding as well for securities. So now we have a bigger ecosystem and offering additional revenue streams for the organization, as well as, again, people can come to us and we can meet them where they are now. And so that's super exciting. And so we're in the process of integrating that and off to the races.
I was on mute. Just for clarification, so if a company, I mean, how does a company qualify to get on your platform? What is
Sure.
what do they, I mean, do they have to already have raised nearly all the money and you bring in the rest? Or is it early stage? Do they have to be in revenue, or do they have to be EBITDA
Yes.
positive? What do you work from those startups?
Great. Excellent. So for Regulation CF, raising capital, it can be either equity or debt. The company can be a pre-seed company. It can also be a project that is in the earlier stages of development even. It depends on how far they are in that development phase. But a company can be pre-revenue. I mean, for a pre-revenue company, you likely are going to be raising equity. In the case of a project, it could be equity, it could be debt. We're not going to, number one, we won't be involved in tax equity. We won't be involved in transfer of credits at this point or anything like that if it's a project. This is really just about it would be sponsor equity or it would be some form of debt. And we can do also revenue share. So for example, if it is a seasonal business or if it's a business where revenue is not right now, but it's coming, they could look at a revenue share note versus a debt note. There's a lot of flexibility. Again, that's the amazing thing about Reg CF is let's work with you to figure out what works for you right now. And look, I think as a general rule of thumb, the idea behind crowdfunding is not set it and forget it. If you're going to come to us and say, you know what, I'm just going to put my offering up here and I'm going to do nothing, let me leverage just your community. I would say at Honeycomb, we'd say, you know what, that's not really what Reg CF is about. There's a certain amount of momentum and excitement that your community is expected to bring to a project or a company offering to get folks that don't know you excited. And so the expectation is, is it 50-50? You bring half, we'll bring half. Is it 60-40? Is it, 40-60? Somewhere in there, there's an expectation that you are going to bring your community. And so what I say to anybody who is thinking about raising capital, you should start your list today. Because no matter what, if you're doing something and you're going to raise capital, you are going to be fundraising, for a very long time. And, building your list, building your community, and thinking strategically about various avenues in order to raise capital. If crowdfunding isn't right for you today, it may be right for you 6 months or a year from now. So you build your list of folks that, hey, if I ever get to the place I want to do a crowdfunding raise, let me get your name and email, and I'll email you. And that is just strategic good thinking regardless. And knowing that Reg CF is always going to be there as a potential avenue, you can whip that out at any time, should give founders and project developers a great sense of freedom, because there is this avenue, and we're here and we're ready to work with you.
The I was just thinking that if you're trying to raise money through a crowdfunding through Reg CF, so you have a network of people. How do you raise money without being on the platform? Do you have to import the people and do the outreach through the platform for B regulation, or can you start reaching out to your network? But how do you create the entity for
That,
allowing them to invest? I hope
that,
you understand what I mean.
that's a great question. Thank you, Robert, for asking. So, if you're going to raise capital under Regulation CF, now there are, as for most of the listeners, just high level, if you're going to issue securities in the United States, generally they would need to be registered with the SEC.
Oh,
And
okay.
going to register with the SEC, and that's, the 1933 Securities Act that came after the 1929 crash and Glass-Steagall and all these things. You need to follow the regulations that the Securities Exchange Commission established, and you need to register your offering, whether it's an equity or debt, but typically it would, the first time you do this, it would be equity. And there's a huge, it's a big lift. There's a lot of legal fees. You have to be you need to be big enough. You need to be this, that, and the other thing. And so that's only available to really, really bigger companies like
Mm,
IBM or a unicorn. And
mm,
you probably all have heard an initial public offering before.
right,
That's
sure.
exactly what that is. You have now gone to the SEC, you have registered this offering, I mean, for the most part, with the SEC, and now it can be offered to the entire public in an IPO. But the huge world of private companies, they're not just doing public offerings, they're doing
Right.
private security offerings. And so therefore, if you're not going to register your security, you need to find an exemption for you to issue security. So many people have heard of Reg D, right? So
Mm,
Reg D is one way to raise capital in the form of securities to, US folks. And Reg A is another one. There are various other ones. And then in 2016, the SEC added another one, and that is Regulation CF. So, and again, the purpose of this was really for small to medium-sized businesses or projects that wanted to raise capital, and with a relatively, kind of lower lift way to get your offering up to the public and actually open it up to anybody, so that they got this avenue of capital moving. And the easiest way to think about it is think of the local brewery who has had
mm,
an amazing following for the last 20 years. They want to add a new restaurant because folks want to hold their weddings there and things like that. And you know, there's no community bank. They come to Honeycomb Credit. We put together, we get their offering. They're already an organization. They're an LLC or an Inc. They're probably an LLC. They have founders. They've got a balance sheet. They've got the basic things of a business. They've been producing revenue. We get them through our workflow. They get up on the platform, and then they have a link so that they can give it to everybody to come jump on the platform. Prior to going live with having a regulation CF offering, pulling together all their documents and working with us, they actually can be talking to their community and say to them, and it's called testing the waters. Hey, I'm thinking about doing a Reg CF raise. This is what it's for my business. I'm going to add another room. This is kind of who we are. I think I'm thinking of doing debt. Would you be interested? And for me to reach out to you when I'm going to do that. And that is within the regulation for people to do, and get down their name and email. They also could take an indication of how much they might be interested in. However, one of the key things is that they cannot take any money. They can't, this is not a secure, it is not something that the business or the project could take money for now. Absolutely, full stop. No, they need to make that clear to folks, but they certainly can start to gather interest, and, jot down people's names and emails. When the offering goes live,
Mhm.
and email all of them and say, hey, it's on Honeycomb Credit. Here's a link.
Okay, okay, okay.
Jump on, open up your account, takes 2 minutes, and
Mm.
then you can review, of course, the documents and make a decision to invest.
So what about a company that just moved to town, doesn't have a following, but has a great technology that really, is really fantastic on reducing CO2 emissions. And he was a successful entrepreneur. Doesn't have the network. This system, what you're talking about, seems to only work if you already have a following. So what do you can it work if you don't have already like my son works at a craft beer place, and they raise lots of money from fans, and
Yeah.
it was relatively easy. But what do you do if you don't have a lot of fans, but
Mhm.
Honeycomb really loves what you're doing? Can they help them in that situation, or do they always have to bring a network of kind of, let's say early stage investors? Let's call
Yeah.
it that.
So look, it's such a case by case situation. If you're coming to the platform with a founder who's had 2 exits and is now,
Yeah.
I mean, it, it is, these are investments, right? So you're going to be you are going to have to make the case that this is a good investment for folks. And sure, is it possible that there are offerings that get posted on platforms where the actual company doesn't bring a ton to the offering and they still have a successful offering? Absolutely, it does happen. But I don't like to. I mean, I think they're going to, they're going to have a story that the crowd can understand that doesn't
Mhm.
know them, right?
I
And
see.
lay it out for them very clearly and make a compelling argument that it's worth jumping on the bandwagon here. So I don't want to say it's not possible. I think it is, and it happens. But I would say, a piece of Reg CF is bringing some folks along. I think people don't realize how big their community is. And I also have found, particularly in like the climate tech space, some folks, you know, don't want to go the friends and family route, and don't want to, uh, you know, reach out to their network, their alumni network from their college. Don't, like they would be shocked at how many folks potentially could come out of the woodworks to invest, based on just their history. So that's where, Honeycomb, we have success, you have a customer success person who comes in and works with you and helps you flush out, all right, let's think about this network and that network, and we'll help you
Okay.
build that. We also offer kind of a premium service, if you will, where, we have folks here that will write your emails for you. Well, they'll do, if you want that, can help you write all those things. But at the end of the day, you're the one that, I'm not going to click your LinkedIn for you. You know,
Right.
you're gonna post a thing and put a little elbow grease into it. Um, so, yeah, I mean, I think folks should, as a general matter, if you're gonna do Regulation CF crowdfunding, it's a good idea to be excited to develop your list and want to reach out to them and get them involved. And by the way, if you believe in what you're doing, you're offering them an opportunity. And, this is your company and you're opening it up and saying, hey, invest. And I want to bring you along on my journey. So it's an opportunity.
And what are the costs for the founder to be on your platform? So there's
Great
probably a
question.
success rate and registration costs and due diligence stuff.
Yep. I would say as a general matter, um, the, we have uh, a platform listing fee, if you will,
Mhm.
is once fill out an application, which doesn't, takes 30 minutes. You're reviewed by our underwriting team, et cetera, and we figure out that you're a good fit. And what a good fit is, we think your business is in a position to actually issue securities, and, uh, you know, it makes sense given your use of proceeds and all these kinds of things. And we work with you on that, right? Because we want you to be successful if you're going to be on the platform, to come to a good decision. Once this is all decided, then you get moved into working with your customer success person, who is going to help you shape your offering and your raise and all these kinds of things. And then, prior to your going live on the platform, you will pay a listing fee. That can be as low as $250. Most common is $500. It gets you a certain number of extra bells and whistles. And then if you want the full service, where we're going to write emails for you and do all that kinds of thing, but it's not necessary, that's only if you'd like it, it's about $2,500. So,
Okay.
uh,
And then a
uh,
success rate probably.
oh, and then so then it's all back end loaded. So if for whatever you raise on the platform, we will take a percentage of. The standard percentage is, this is kind of can move around, but it's
Sure.
generally around 8.5%.
Okay.
Um, However, if your raise is 124,000, that's one thing. If you're going to raise 3 to 4 million, that's going to be a different thing. So we will work with you on that.
Mm.
But what you do get with that is, we will, if you're issuing debt, we'll handle all your repayments for you, do all your tax documents for you, et cetera, and you don't have to spend another dime.
Mm.
So that'll all be taken care of for you. Yeah,
What is the maximum, minimum max, or let's say the maximum
great
that
question.
you can raise via crowdfunding?
That's a great question. So the regulation, again, think about this. The SEC wanted to make the lift lower on both sides, both for the organization raising capital and for investors to engage and get involved. And so therefore, because it's a little easier, a little less, checks and balances by the SEC in order to allow that flow, they put some caps on it.
Mm.
So, which makes total sense. So the maximum you can raise as an issuer in any one year is 5 million.
In one,
But
oh, okay, in 1 year.
in one year. So, and it's rolling. So if you raised 5 million today, you can, from the crowd. You can come back a year from now and raise another 5 million. If
Oh,
you
okay.
raise 4 million today, you can come back tomorrow and work to raise another million because it's rolling, right? And
Mm,
so, when you do a raise, typically you will set a target, which is this is the minimum you want to raise, and then you can set a maximum. Max can be 5 million, it can be lower.
right.
The minimum typically is established based on a little bit of it's art on one hand, and a piece of it is, hey, let's look at your use of proceeds. Oh, you're you want capital in order to do 3 pilots. And that's $1 million, right? One
Mm,
pilot's going to cost you 250. If you don't get 250, you you can't move forward. So therefore, maybe the minimum that you're going to set is 250, and then a maximum of, let's say, $1 million.
mm,
And because that will make sense. What you don't want to do is set your minimum such that you set it at 50,000, which we have minimums as low as 10, actually. But you don't want to set it at a rate that actually if the crowd gives you the cash, you're not going to be able to do much with it, right? So that's a piece of it. The other piece of setting the minimum is what do you think you can bring to the table so that, if you're going to do the raise, let's make it successful, right? And so that's a piece of it. So, minimums can range. We have one issuer that sets it at 10,000 and it looks to raise, 1 to 2 million. Um, we have other times it's set at 50,000 and with $124,000 max. It just depends. But that target is going to set what defines a successful raise. You need to hit that in
mm,
order to actually have your crowdfunding raise close. Otherwise, we call it not successful and all the investors get their money back, and
mm.
we look to another day.
Because you're the time frame for a successful closing is rather short. I was surprised to hear like 90 days.
Yeah. So, again, Reg CF is, uh, you know, they're generally, they run 30, 60, 90 days.
Mm,
And, Connecticut Green Bank does their raises in 30 days. Then they come back again, 2 months later and do another raise. Uh, Other folks, you're doing an equity raise, it may take a little longer. You do 90 days. It's not impossible to go longer.
mm,
A piece of it is what do you got going on? Because what we find in crowdfunding is that there's this kind of like you launch your raise, there's like a lot of momentum at the beginning. You just, you get the word out, everybody jumps on, etc. Then it kind of tails off and it's a little quiet. And then towards the end, it raises again. And that is not an unusual chart to see. And so therefore, a piece of what it is behind, this process is momentum and excitement and getting folks to jump in and etc. You drag that on too long, it loses some of that excitement. If you're doing, again, debt, people want to get invested, right? So, because debt usually runs what, 1 year, 3 years, 5 years, 7 years, could be longer. We've done longer. We've done 15 years at Raise Green. Um, but every day is a lost interest that you're not accruing if the offering doesn't close. Equity, a little less rush because you're in it for the long term.
mm.
Uh, and if it closes today or tomorrow, it doesn't matter you so much. But yeah, this is about the momentum. So raises tend to be 30, 60, 90, somewhere in there.
And the so what what is the big ambition of now Honeycomb Credit with these three entities merged together. You know,
Yeah.
where do you want to take this in the next
Yeah.
5 years?
Yeah. Well, our dream is to be the biggest impact investing platform in the CF space. Uh, that's kind of, that's the big dream, and just to keep growing this. Um, how do we grow? We grow through more offerings, we grow through larger offerings, we grow through partnerships. I use the Connecticut Green Bank again. We've had, the idea of, folks that actually have ongoing capital needs. We're the platform for them. Come raise some capital, use it. You have happy investors come back, maybe they reinvest. We see, Connecticut Green Bank, we see 60% of the folks that have been in a note love to reinvest in the next one. So, there's, to really scale this thing, it's more offerings, it's larger offerings, it's repeat offerings. And then, of course, on the investor side, which we actively want to grow, it's finding new avenues. For example, a DAF. That is an amazing route for folks to invest in private securities. Think about it this way. I have donated this money for impact, right? I then, once, if folks are not familiar, a donor advised fund,
Mm.
it is it is an amazing opportunity. You can take $100,000 today, or some stock that's appreciated, or take $10,000 today, and you put it into a donor advised fund, which is essentially a 501(c)(3). You take the tax deduction today. That money is then in an account where you can advise going forward on two things. One is where to donate it to. What 501(c)(3) would you like to donate it to? Is it the New York Philharmonic? Is it
Mm.
the youth program up at Riverside Church that I worked on, for all those years, called the Riverside Hawks? Is it, or the other avenue is, if you're not donating it, where do you want to invest it? Because now you've got cash sitting in that account. Well, hello, folks. You can actually invest on Honeycomb Credit into offerings. And this just makes all the sense in the world. This is impact money. This is not part anymore of your personal portfolio. You have donated, it is gone. And the purpose of this is impact. And yes, if you're investing it as opposed to donating it directly, it is a financial investment, and you want to make sure, you want to feel good that, yeah, it is worth taking the risk on this investment, for what they're trying to accomplish and the impact that they're going to have if they're successful. And by the way, hopefully I get my financial return, and that financial return goes back into my DAF account, and then I can choose to reinvest it in something else, or I can go and donate it. So it is money that is geared already to take risk for impact. And it just makes all the sense in the world. So there are DAFs out there,
Mm.
there are big ones that are very familiar. They may not give you the chance to invest in private securities, but there are other DAFs out there that will. And the amazing thing is you can donate from your existing DAF. Let's say you have money at Fidelity or Schwab or somewhere there. You can donate from that DAF to another DAF, just transfer it. You don't take another tax deduction, but you just transfer it over. And then from that other DAF, you get to invest on the platform. And we think that is an amazing, there's $250 billion that is cash that is sitting in DAFs today that's being invested in various things, money market funds or whatever. But that money could just think a small sliver of that, if that could go towards, the amazing projects and, businesses that are on our platform, that would be incredible impact. And so that's an example. Self-directed IRAs, another example where you can invest directly from your self-directed IRA on the platform. Easy peasy. And we know we have examples of firms that you could work with. You can just reach me at jackie.logan@honeycombcredit.com. And happy to share some names, but amazing. And of course, directly from your portfolio. Now look, these are risky investments, right? These are Reg CF investments, et cetera, et cetera. And, folks need to speak to their financial advisor as to what makes sense for them in their portfolio. But just in working with the amazing, folks that I've met through my Raise Green journey and now my Honeycomb journey, they're excited to take a piece of their investment portfolio and become an angel investor in some projects and other types of investments on the platform. And the exciting thing is you can, with $1,000, you can invest in 10 companies or projects potentially and have a diversified portfolio. And so it is, because the amounts are so small, you can actually put your toe in the water, start to get involved, start to find out where your passions are and what organizations you'd like to support for a financial return, and get involved. And the unique thing about crowdfunding is, as part of the regulation, we as a funding portal have to give you, an investor, an opportunity to speak directly to the company in a very public manner. So we have a Q&A, an FAQ, not FAQ, a Q&A tab on every offering, where if you look at the offering, you read the Form C, which is the prospectus, if you will, for the offering, all linked for you on the offering page, submitted to the SEC, et cetera, and you have questions, you just get on the tab and you ask the company, hey, with the uncertainty with the IRA tax credits, how's that going to impact your business? And, is there going to be a return for me, et cetera, because I'm worried about that. And you get a chance to hear directly from the company. And what's interesting is you also get to watch the questions of other people looking at the investment. And that's what people call the wisdom of the crowd, is like not just you asking questions, but other people hearing the company's answer. And then it develops a kind of ecosystem where you get to gather additional information on the organization and, make a better financial decision. The SEC actually requires us to leave an offering open 21 days. Even if people came in day one, filled at 5 million, if it's a $5 million offering, or if it's 124,000, filled it to there, we have to keep that offering open for comment, because the SEC, because the regulation wants to allow the wisdom of the crowd, let people ask questions, uncover things, as they do their own due diligence. And then we could close it after 21 days. But yeah, it's super exciting, and you're boots on the ground. This is the real deal. And investors have an opportunity to get involved and have a big impact.
My apology, we went way over the time that I
Oh,
promised you
no!
that would be, but that's okay. Fine. In conclusion, how can those that are listening to this podcast after we post it, how can they help you?
So look, if you are involved in a US entity, I do have to say, if you're raising capital, the regulation for Reg CF requires you to be a US entity. Now, that doesn't mean you can't be a subsidiary of a non-US entity or have non-US entity subsidiaries, but the issuing organization has to be an operating entity. And you have, you're looking to raise capital, or you're really early on and you want to explore our IFW capabilities, we'd love to hear from you. And if you're, you know, you're developing a project and you would love to open it up to the community to invest, we would love to talk to you. And we've done this before, so we know how to get you in and through and up with an incredibly low lift from the Reg CF perspective. If you are an investor, we would love to have you come take a look at the platform. Reach out to me directly if you'd like. I'd love to introduce you to our head of our investor relations at Honeycomb Credit. She's amazing. And, talk to you about what's going on the platform and how you could get involved, and or just jump on, open up an account and invest $100 today and get involved and see what story speaks to you. And, the wonderful thing is you can take climate action today. You can improve local communities. And I'm so hopeful, we can get this thing done together. So I hope to hear from you all.
Well, Jackie, thank you so much for doing the heavy lifting and moving from Wall Street to Main Street. I was particularly impressed with the fact that the George, who is the CEO of Honeycomb Credit, that his family were the original George Bailey family from It's a Wonderful Life, having done a community bank for
Yeah,
150 years. So
yeah,
I'm sure that more and more people, as they understand what is crowdfunding, those who are either raising or actually investing, will find it actually something that would appeal to them, because it can be really quite challenging trying to raise money for startups among VCs.
yeah,
So I wish you great
yeah.
success. And
Thank you.
let me just stop this